Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. This is where we look at the entire world from a chartist point of view. We look at where the world economies are heading because we believe, one, that 3 out of 4 stocks will follow the overall market. So if we know which way the market is heading, we know which way 3 out of 4 stocks might be heading. And 2, we also might believe that the stock market tends to lead the overall economy by around about 6 months. This has been found by Ken Fisher in one of his awesome books, The Wall Street Waltz. Brilliant book on sort of random economics. If you ever get a chance to read it, fantastic stuff. However, in the meantime, on the charts, we look at very simple trend following techniques and also some more advanced techniques like Elliott wave and Gann and Fibonacci and stuff like that. Just for the hell of it. What the heck, hey? If we can, we might as well. Guys, let's jump straight into it. All ordinaries this week. As you can see, oh man, it's just such a phenomenal week this week is because we a couple of weeks ago we said that the market had to hold its recent low right here. Now, if it did, that would sort of keep our Elliott wave count validated. Our Elliott wave count being, if I might just get rid of that, we've got our new wave 1, new wave 2, and this is on a longer term basis obviously, but we're heading into potentially a wave 3, which is the longest move out of the Elliott waves. Traditionally, or usually, the highest probability move is the longest move out of any of the Elliott waves. Now, what that means for you is that if we do get a confirmed signal right here, then potentially we're heading into a very long and prolonged upward move, which is great news for buying stocks. Now, of course, always keep your stop losses in, don't risk too much, but the idea about that is that's based on Elliott wave theory, basically. Now, just to give you an idea of where the market might head, again, based on Elliott wave theory, from the previous low back in May 2010 to the high in about March 2011, and then the recent bottom that we've got at the moment. If we were to look at the most probable move from a wave 3 Elliott wave standpoint, we'd be looking at around about 6,000, guys. So yes, that's if we were to believe Elliott wave theory, that is the potential move on the Elliott wave theory is around about 6,000 on the All Ordinaries. Now, what I've got here at the moment is on Friday we've had a lot of stocks moving, particularly in the mining sector. At least that's what I've found. Mining resources, materials have just been fantastic. They've just been going really well, especially gold as well over the last couple of weeks. And yeah, what this means is we've had a recent upward move right here. It was sort of a fake move because the market fell away, but now it's coming back for a second try. I am starting to sort of buy into stocks myself personally at the moment because a lot of stocks are starting to trigger entry signals at the same time. So this has huge implications for the market because if more entry signals are triggered, more people start buying. Potentially this will just move the market up further. At least this is what the patterns in the charts at the moment have the potential to do to the market. What I'd like to see is a move above this recent high, so around 4,717. But basically the fact that it's closed above this trend line already, and this is the flatter trend line that we spoke about 2 weeks ago. We said that with that false signal that we got right here, and again, check out the previous ASX Market Watches. But with that false signal, we also got a flatter trend line. So we were able to flatten our trend line, and now the market has come back, and it's going for a second round. It's coming back for more, and that's what I like. I like that. Not only that, but it didn't break the previous low right here. So we're still in the game for our Wave 3 Elliott wave. Keep your trend following techniques into perspective. Keep your risk management correct. Keep your stop loss in place. Very important stuff. And yeah, basically trade with the trend. And hopefully we're getting a potential up move starting from the crossing of this trend line on Friday. Happy days. Really quickly, the Dow Jones. We've still got resistance at 12,882. So that has not changed on the Dow Jones. We have broken out of our little box formation here, so that's good news. But again, be very wary of this of this resistance right here, you might find that the leading stocks are tending to move off this base, so into this region here. The leading stocks might be tending to move into new uncharted territory. Stuff, especially in technology in America at the moment, doing really well, and loving technology stocks. So like Apple, Amazon, or like Amazon, IT and that sort of stuff, doing very well. But yeah, just be wary of that resistance up there. What we've got on the FTSE, still in our sideways movement. We're still there's not much going on. Basically, we've had a sideways movement for almost a year now. About 8 to 10 months, and yeah, basically we've got resistance, huge resistance at 6,100. I'd like to see that it would break past that level before any solid buying would really continue on the FTSE. That would be a really solid signal if it were to break above that 6,100 level, guys. But in the meantime, a lot of people are selling on that resistance and buying on this support down here. So yeah, not much more that you can really say about that at the moment. The FTSE is still in that sideways movement. Next is the Nikkei. Really quickly, the Nikkei, we called a short-term entry signal a couple of weeks ago, right about here. Shablam! At about 9,700, 9,800 approximately. Now that is happy days. Basically, the market has continued up. We said last week that the market would find short-term resistance on this single bar, which it did. It dropped, didn't get a solid sort of exit signal, and now the market is still continuing up. So again, this is a great thing on the Nikkei, guys, because we get to flatten our trend line as well. And I'll just get rid of that. We get to flatten our trend line. So now we've got this flatter trend line. Now we've got a much more solid base for the Nikkei, still continuing up. Happy days. And again, as I said last week, it's in a short-term uptrend and it's in a medium-term uptrend as well, as based on this trend line from March. So yeah, apart from this little glitch in March when the tsunami happened. Next, really quickly, is the Shanghai Composite, and again, this on the Shanghai Composite, we called an entry signal there, exit signal there, exit signal there, entry signal here, and now the market is basically treading water. So yeah, we've still got our uptrend. If it was to close below, see, we've got this little zigzag pattern forming here. If it was to close below that level at about 27,050, that would, it could be seen as an exit signal, or it could be seen as a continuation pattern. But yeah, if you were to be safe, you'd sort of keep your stop losses below there and then wait for a new entry signal to emerge on the Shanghai Composite. But again, all in the meantime, we've got, see, this long-term downtrend line. So long-term, there's a downtrend in place. In the very short term, it's still in an uptrend, but only just, guys, and there's still resistance at 3,000 on the Shanghai Composite there, so I hope that makes sense. Really quickly, the Hang Seng is in a very similar situation. See this long-term downtrend, and again, we've got a medium-term downtrend on the Hang Seng as well. It's sort of coming up for another test of 22,800, and that's fantastic news for me. I think that's great. I think, I would prefer to see that happens. I'd really, for a short-term entry signal, I'd prefer to see, it's tough at the moment because I'd prefer to see a close above 22,800, but then you've got to remember that there's still resistance at 24,000 on the Hang Seng. So yeah, still in a medium term and a long term downtrend on the Hang Seng at the moment. And last but not least, guys, is the BSE 30 in India. Really quickly, very similar scenario in India as well. See this downtrend line? It's basically a medium to long term downtrend. Let's have a quick look. Yeah, no, basically down to sideways. However, if it breaks above 19,200, that would be a great entry signal based on the BSE 30, based on trend lines. And in the meantime, we did call a sort of a short-term entry signal there, and we called also resistance at the downtrend line, which tends to happen. But again, not rocket science, very simple stuff. So in the meantime, it's just sort of treading water below the trend line, which you'll find happens a lot. This will actually happen a lot, guys. As you can see, it did happen right here again, but the market fell away. So this is really the moment of truth for the BSE 30. If it breaks above 19,200, that would be a buying signal for myself. If it breaks back below this level down here at 18,300, then that would be more downward movement, potentially based on this little any breakout up or down of this little continuation or this little consolidation pattern here. So guys, very simple stuff. That's the world from a chartist point of view. Take it, use it. If it works for you, use it, test it out, just try it for yourself. Have a great time with it, because ultimately the markets should be a little bit of fun, as well as not too stressful, especially if you know your risk and you've got your stop losses in and you're trading in the same direction as the trend. The markets don't have to be a stressful place to be. They can be quite enjoyable, and happy days to all. Guys, have a great week. I'll see you next week. Happy trending until then. Bye for now.